All right, hello everyone and welcome. This is the 207th Scientific Governance Risk meeting here at MakerDAO. My name is Peyton. I go by Pros11 online, and I'm one of the governance facilitators here, joined by a bunch of awesome people that contribute or are otherwise interested in what we got going on here at Maker. As those of you who are here live noted, this call is being recorded, so hello to those who are watching afterwards. This is our weekly call where we get to talk about all things Maker, what's going on in governance, any external or internal risks to the protocol. Yeah, this is our call. This is where I tell you what's going on and get to engage as a community on the issues we see happening. So a couple of ground rules, I guess, before we get too far into this, just to make sure we have like a productive and enjoyable call. Number one, let's not talk over each other. That's obviously not a fun experience for anyone and really ruins the recording. One way you can kind of help this out is by using the raised hand button. If you are on the desktop version of Zoom, that's going to be under your reactions. You kind of use this like a speakers list. So I just watch as people raise their hands, and as soon as someone's done talking, I'll call them. So like I see David just raised his hand. I finished my point in this example. I'd say, hey, David, go for it. And that's like one easy way to moderate. We understand like not everyone can hop on the mic. So if you do have questions, comments, concerns, feel free to drop them in the chat and I'll try to work them in. And on that note as well, if you do have a camera and you don't mind it being on, again, this is recording also potentially being on YouTube if you have anything smart to say, we would encourage you turning the camera on. Just really helps with getting to see one each other, engagement, and all that other jazz. Cool. I think that more or less covers the rules. Like the only other thing I want to say is like, if this is an open community call, some people might be joining for the first time today. So like, let's be gracious. Let's encourage question asking, and let's really get some different viewpoints exchanged today. Cool. Let's go to the next slide. All right. As usual, we'll start with our governance roundup, featuring the votes, what's happening with Maker improvement proposals, and a snapshot of what's going on in the forum. We've got two initiative updates today, so a bit of a treat. We'll be hearing the August financials and an update on the ambassador program. For those people, I will be giving you co-hosts soon, so don't worry. As soon as I'm done talking, we'll be all set. And then finally, we got some discussion topics today. As David showed for those that were in the room earlier, we got kind of a more fun activity that will hopefully be a little more engaging for talking about these. We're going to give it a go today. If it doesn't work, we'll try something different next week. But yeah, let's get into it. We didn't have a ton of votes concluding this week, but there were still 4, which is, I guess, a decent amount for a non-ratification full week. So if we go to the next slide there. Awesome. 3 of them passed. We had the SPF for legal work on MIP 65, as well as MIP 65 amendments, and the poll to move the updating of the HG Bank contract onto an executive. The one poll that did not pass was the NKR pro rata vesting for former Real World Finance members. That was a pretty close poll. So I suspect there might be some stuff to discuss or follow up on the forums there. But that is the results. We have 3 active green light polls. So it looks like I cut off the third from the screen. Sorry about that. Let me see which one that third one was. Or possibility that I can't count, but I'm pretty sure there's 3. Yeah, we're missing Gnosis staff, Gino. Sorry about that. So if you have an opinion on Gino or any of the 2 other liquidity pools we're looking to investigate, please do vote. Voting will end a week from Monday on those. All right, back to, yeah, thanks for on the fly there, David. Sorry, it was all time. Executive wise, we had an executive pass. It is pending execution. Will be eligible tomorrow, but that had some core unit vesting as well as recognized delegate compensation and the latest Maker Open Market Committee parameter changes. Next week, we've got a couple core unit budget streams, some SPF funding transfers, an HV Bank legal agreement update, and there's some light housework that to put in there as well, but shouldn't have any operating effects protocol. Excellent. I think that does it on my end. So I'm happy to hand over the mic to Gal and give some people some hosting powers. Gal is our MIP editor. That's one thing I guess I forgot at the start is we can introduce each other when we start talking so everyone knows who's talking. Gal is one of our two MIP editors. Take it away, Gal.
Hello, everyone. Okay, so this is Gala to give the weekly updates for MIPS. So as Peyton just mentioned, we had 2 short ratification polls going up on Monday this week. These are 3-day polls that enter the weekly cycle. So let's take a look at them. So one of them is an amendment to MIP 65, Monetalist Clydesdale, that modifies how the legal verification process is to be conducted. And the other one is a special purpose fund that reimburses the Strategic Finance Core Unit for advancing funds for MIP 65 related legal work. So both of these short ratification polls passed with over 90% of support. Now, next we have the formally submitted proposals. So September's formal submission window closed yesterday. We have 8 formally submitted proposals that make up 6 ratification polls. They will be up for vote next Monday. So let's take a look at the first one, the MakerDAO delegates MIP Set, that formalizes delegates in the protocol, the rules, and the way their compensation works. Next, we have 2 MKR budgets, one for Stark Net Engineering per unit, where 270 MKR will be vested to core unit members per year over 3 years with a 1-year cliff. So a total of 810 MKR will be vested. And the other one, it's for GovAlpha with 3 different options with different multipliers each. So in addition to the usual reject and abstain options. The budget spans from the 1st of August of this year to the 1st of August of 2023 next year. Next, we have 1 core unit offboarding for the strategic happiness core unit. 1 amendment that modifies MIP 61, which is the delegate compensation, by replacing the fixed start date with a rolling window to the effect of calculating participation metrics. However, if the delegate MIP Set that we just mentioned passes, the amendment would not have any effect because the MIP Set deprecates MIP 61. Next, we have special purpose fund, 181,000 SPF for funding further work from the ambassador program. So those are our formal submissions for this month cycle. And now we can take a look to the proposals in RFC. So you may know there are many new proposals. We will only cover those that have been posted in the last week. So they are all eligible to enter October governance cycle. So we have MIP 80, Maker Compensation Guideline, that describes how MKR will be used to recruit, retain, and align interest in the Maker community. MIP 81, Coinbase USDC institutional rewards, that will onboard an account representing MakerDAO to Coinbase Prime and transfer 1/3 of the PSM's USDC into custody to earn USDC rewards with Coinbase. And finally, there's MIP 82, which is the Monetalist Coinbase Appaloosa, love the name, that will onboard and activate a 500 million DAI real world asset vault for the purpose of acquiring USDC via the PSM and provide an USDC loan to Coinbase. So those are the top level MIPs in RFC. We have 1 core unit budget for the development and UX core unit. In addition to business as usual, which is the reiteration of their previous ratified budget, they provide 2 new reduced options. We have 1 special purpose fund for legal domain work on greenlit-backed finance collateral. So this special purpose fund requests some yet undefined amount of DAI to support onboarding block tower credit as a real-world arranger. Depending on the amount, it will enter either the monthly cycle or the weekly cycle. We have one new amendment. It shortens the RFC period for the facilitator offboardings and reduces the poll duration to 1 week. The amendment also includes some language clarifications. And finally, we have the Endgame pre-launch MIP sets. So there's MIP 83, there's three top-level MIPs. MIP 83, recognize launch MetaDAO clusters, MIP 84, activate protocol-owned bot emulation, and MIP 85, LDO to MKR OTC swap. We have two amendments, MIP removal sub-proposals, and MIP 16 amendments, 3 mandate modification sub-proposals. So it's one for the strategic finance core unit, one for risk core unit, and one for the collateral engineering services core unit. And finally, it has 3 core unit offboardings, one for the strategic happiness core unit, and one for the real world finance and events core units. So there's a lot of new information to process. We know this, so I won't go into more details right now. We do encourage you to attend there is a call organized by team tomorrow at 14:30 UTC. So I'll drop the link in the chat for that. And finally, for important dates, well, the ratification polls start next Monday, so they will run for 2 weeks. Please go cast your votes. And also, if you're interested in reviewing the complete full list of proposals in RFC, you can check the RFC forum category. Thank you very much. That's all for MIPS.
Right on, Gal. That was awesome. Yeah, obviously a lot going on, so I do suggest checking out the written version of the weekly MIPS update. That'll have links out to all the proposals in case you're unclear. But we'll move it right along. I'll pass the mic over to Artem from GovComm's core unit to tell us what's been going on in the forum.
Hey, thanks for the introduction. I just posted the link to the forum recap that was just posted a few hours ago, and going over the week of September 1st to the 7th. And we'll get started with our news and announcements. And for this recap, I won't be going over the MIPs that were posted by Rune and by Coinbase. Those were covered in the weekly relay, and also they will take quite a bit of time. But first up, so on the heels of recent discussion that's been going on about Maker's overall target spend level, PIPCO of Strategic Finance Core Unit shared a simplified worksheet for MKR holders, delegates, and also community members to help model potential changes to each core unit budget as part of the budget reduction process. And the document contains 2 sheets, one for consolidated budgets and another for the last 6 months of core unit spendings. And finally, he asks each core unit to copy down their own file and make appropriate changes. And yes, my cat, of course, comes in right when I'm speaking. All right, next up. Rune announced that this week's DVC calls, so yesterday and today, have been canceled to allow him some time on focusing on other materials and attend other calls. He also will post additional content before continuing on with next week's DVC calls, which should continue as usual on their regular cadence. And next up, we had 2 updates made for both a past executive and a live poll, green light poll going on right now. So going from top down, first up, the protocol engineering core unit had last week's executive vote, which was to limit the increase in Curve V1 ETH staked ETH-A maximum debt ceiling to 20 million DAI instead of the 50 million DAI that was initially recommended by the MOMC, which was approved. And the next update was for the green light poll for Gamma Uni V2 Wrap BTC Ren BTC, which had contained an error within its asset title initially, and this was appropriately updated thanks to both Paper Imperium and GovAlpha. And something that I didn't have a chance to add to this to the forum recap, but definitely worth mentioning. Recognized delegate Tim Black will hold a call tomorrow at 2:30 p.m. UTC to promote mass discussion and explore the endgame and the endgame MIPS. And I will actually post a link to that right now.
Oh, Gala already posted it.
Oh, okay.
Yeah,
well,
she mentioned
thanks.
it at the end of her segment.
Yeah. Okay, cool. Well, I guess double clarification. All right, so going on to our signal requests, we have 2 signal requests currently running. And this first one, I've already summarized it at least 3 times on the GNR. So I'll just mention the update that both 𝘱𝘬𝘪𝘯𝘕 and 𝘱𝘰𝘮 determined that given the level of interest and discussion that's been surrounding this proposal, the voting period was extended until tomorrow, September 9th. And it did actually change the votes a bit, well, a lot. So the voting breakdown to increase the TIN for the USDC PSM previously, which was the majority vote for no change, has actually now led to a different vote outcome, which is currently to increase the TIN to 0.1%, which is 10 base points. And for our next signal request, by ACE. So on June 16th this year, a poll to manage velodrome airdrops and the V NFT had passed. In response to this, ACE from Strategic Finance met with Brian from PE, as well as the velodrome finance team to understand what's the best way to manage V NFT in a decentralized way. And they determined that a multi-sig would be the best solution for managing the airdrop. So therefore, ACE requests 4 trusted community members to help volunteer as signers for a MIP 47 compliant multi-sig to vote MakerDAO's VNFT and the Velodrome Finance. And this signal ends on September 21st. And so far, it's pretty early, but 60% of the votes are in support for this action. And that's it on my end. Oh, nice little image, a little update. But yeah, the forum recap itself contains more announcements as well as all of the discussions for the week, more information on the signal requests and any initiatives and help wanted. And that's it.
Right on. I was going to comment on the clip art there too. Definitely good touch. Appreciate the update as always, Martin. All right, cool. That should take us to our initiative updates. I think we usually start with the finance update, but I'm completely spacing. All right, nice. Wonderful. I think we have Adrian from the Strategic Finance Core Unit here to present that, unless it happens to be really good news.
Nope, it's pretty bad news. So,
all right, lay it on us.
In Spanish or in English?
Starting English, I guess.
So the agenda, so I invite everybody to take a look at the PDF materials that we posted on the forums. They summarize the August financial results as usual, but we also provide a small FAQ style document with an overview of the accounting standards and practices. Some of the delegates have asked us at various points in time some of the questions that we try to include here, and we tried to summarize them in one place, and we'll carve this out as a separate document and post it separately also. I don't know to what extent there's interest of going through it on this call. To the extent that there is, I don't mind spending time on that. But I propose to just go through the August financial results, and if there's any curiosity about the accounting standards, we can jump to that. Otherwise, we can then move on to cuts. This seems okay. So the executive summary is that the overall market is basically ranging. The amount of tokens locked in the maker system is basically also ranging. But unfortunately, this is also the first month with a total net negative net protocol income of minus 1.4 million versus positive 1.0 last month. The main driver for this is the fact that our net interest income has collapsed, essentially amid a collapse in token prices and amid a collapse in lending demand, and further reductions in stability fees and so forth, like a number of sort of bear market drivers, as well as, given that this is the sort of second month of a ranging market, there are basically no liquidation revenues anymore. So congratulations, this is the first fully negative month of net protocol income. There is a lot of good news on the horizon, depending on how you feel about US Treasuries, MIP 65, and so forth. If you're happy about that, then you'll be happy that we can soon return to profitability. If you're not, then I guess you can voice your views. So this graph basically shows how liquidations have completely flattened and core unit expenses are essentially staying in range. We're looking at maybe 30 to 35, worst case 40 million in annualized expense, but this would have to be with some deep unanticipated expenses. We're really tracking towards the 30 million annualized run rate based on last month. If you consult the interest income decomposition page, the only major change relative to last month. So here, this is a page where we basically take the interest revenue portion. At the bottom, you can see this 1.5 for August, and we break it down through the constituent drivers. For the past few months, this has been relatively stable. One of the main changes this month is that our outstanding real world asset debt has hit an all-time high. So we can expect that to, over time, increase the amount of interest income from there. And the PSM return on assets is still 0. But this is something that we're hoping to change as long as we have a PSM. The lending business, again, no major news, slight uptick behind, a slightly higher ranging. I'm not looking at the chat. I don't know. Peyton is smiling at things in the chat. So it's really not a very interesting month. It's basically ranging. We're losing money. The amount of DAI is relatively stable across all of the wallets. The ETH market share is sort of flat and ranging well down year on year in terms of overall market size in ETH terms. Similar story for BTC. So August has full exit of Celsius, which is this funny dip over here as they repaid their debt. And there are no major new entries or exits for defaults in Bitcoin lending. And one notable change that we are seeing in the vaults is a shift from riskier vaults, so to speak, to less risky vaults. So this little flag here that I highlighted is wrapped stake B. So at about this time, this is where we sort of set the stability fees to 0. And we saw a corresponding influx of wrapped stake demand come in very quickly and hit the debt ceiling. So even utilization for some of these vaults has increased, but it doesn't necessarily come with a corresponding increase in interest income, given that these stability fees are slightly lower. And here, this is a new page where we're trying to show the change in mix of income, of annualized income. So this isn't real income. This is sort of monthly income multiplied by 12 to try and see what sort of projected income could be at a given point in time. And this is a multivariate sort of decomposition that depends on the amount of tokens, the price of the tokens, and the stability fee that we charge on those tokens. And so here, one thing that we'd like to call out is the fact that a lot of our income is still, even if it's so squished and tiny, it's still dependent on ETH. And what this influx of demand of wrapped stake ETH shows is that there could be a potential shift of the market towards liquid stake derivatives as a main sort of primitive versus vanilla ETH. And then here, once again, just showing that our revenue growth basically tracks essentially the price of the underlying collateral coins. Final sort of graph in the market update, just to celebrate or mourn the all-time high in real-world asset debt issuance. HVB has come online and we've cleared the $100 million hurdle. So this is a huge milestone or negative event, depending on how you see it. But it's an all-time high either way. And then I invite you to take a look at the overview of accounting standards and practices that we employ at Strategic Finance. So here, we're really sort of inventing things as we go along. There's no GAAP, there's no IFRS board setting the accounting standards. But here we're trying to explain kind of how we are digesting these smart contract calls and state changes and interpreting them as financial reports. So to the extent that, okay, you're welcome, Chris. I'm just trying to be impartially reporting. I mean, if we nuke the PSM and we replace it with ETH, we'll still need some amount of financial diligence and reporting. It'll just be much weirder than it is today already. Potentially much more interesting. And yeah, so the question is, does everyone want to spend 10 minutes to go through the accounting standards and practices? If not, we can change the agenda item. If yes, we can go through it quickly. I won't be offended. It's okay if nobody wants to.
Yeah, I mean, as a nerd, I'm always up for hearing about it. But I'm curious, like, any delegates or anyone who's like been looking to make decisions based on these reports, like, you know, if that's the case, it might be helpful for you to hear how they're being generated.
What? Okay, so for CAT's benefits, I think we'll maybe go through it quickly. So, so when we think about accounting standards and practices, we try to keep to very simple sort of guiding principles to try and be, first of all, the most conservative that we can be. So if there are two options to represent the economic state of the protocol, we always pick the more conservative one. We try to keep it simple. So we try to map contract calls to as few changes in the accounting ledger as possible. And when something is ambiguous, we try to guide by function rather than form. So smart contract calls are mapped to what it looks like they're doing rather than what they say they're trying to do. And the output of this is basically turning a bunch of smart contracts and their state changes into financial information that's more comparable with traditional structures and is useful in terms of showing what the state of a protocol looks like economically. And so what we have in the next 3 pages is basically a simplified view of what this all means and what these principles all mean. And we're going to take you through a quick user journey of what happens when a user locks collateral in Maker. And in this case, we've labeled it ETH, but it's basically could be anything. It could be a real world asset, could be wrapped Bitcoin. And the main principle is that we follow this sort of T-shaped accounting method that's common in accounting, where you have assets on one side and the way that they're financed either in liabilities or equities on the other. And the important, I think, takeaway on this page is essentially that the Maker balance sheet we don't consider that the Maker balance sheet has changed until Maker, quote unquote, buys the loan from the user. And this is the moment where the DAI loan shows up on the asset side of the Maker balance sheet and the DAI outstanding shows up on the liabilities. So it's only at this moment where the Maker balance sheet actually changes. The user can deposit their ETH, but won't actually change economically the state of the protocol as far as we're concerned. This is just a point of view, right? You could take a bigger balance sheet point of view also, but it seems more conservative to assume that the balance sheet is smaller than the collateral that's deposited. And then this page tries to show what happens to the state of the system when the collateral value changes. So you lock in collateral to secure a loan, you issue DAI, but what happens when the value of that collateral changes in the background? What we're doing, so it can either stay the same, decrease, or increase. And here, the important points to take home is that we don't account for any possibility of rehypothecation because this is incompatible with the way that the system is currently designed. It can be seized for liquidation, so we do consider it to be sort of part of the balance sheet. It's not like there's a segregated mini balance sheet for each user. And that's sort of the Maker protocol. We do consider that Maker has some amount of control or owns the assets and liabilities and equity on its balance sheet. And so we essentially consider that when the users use the votes to mint DAI, they are surrendering some amount of economic value to the system. And then finally, over time, the way that we generate surplus buffer or retained earnings is through the accrual of stability fees. And then here we consider surplus buffer. So surplus buffer in traditional banking, you have like tier 1 capital, retained earnings, surplus buffer, treasury, and so forth. In Maker, this is very simple. There's no segregation between the funds that are allocated for losses and the funds that are just retained. So And then the other main point to retain here is that we don't recognize any revenue until it is actually changed, until the state of the blockchain actually changes. So all the while, the Maker balance sheet is silently accruing second by second the rate on each of the vaults. But until the state of the protocol changes, these revenues aren't recognized or updated. So there are sort of edge cases where a vault could be opened and closed between calls for drip, and then you essentially have created bad debt, as it were, but Maker updates sufficiently often that this isn't really a problem at the moment. So this looks more like a cash-based view of accounting than it does of an accrual-based view. In a traditional company, you could essentially recognize the accrued interest continuously. We consider it only on a cash basis and call it on a cash basis, but in practice, they look very similar because there's so much usage of Maker system. And then finally here, yeah, this is the diagram. So this is the diagram that we showed a few months ago or last month. And this shows the aggregate view of what the Maker balance sheet looks like today. When the strategic finance team refers to underinvesting the balance sheet, we're describing how we have 80% of our assets in the PSN that are generating essentially 0% of our revenue. And this is a problem because the whole point of this balancing system is that you generate a surplus buffer to essentially sustain any potential losses that the protocol might incur in the future. So this is generating revenue is not so much for Maker to go to the moon, but it's also to make sure that the value of the collateral that's backing every DAI is upheld, and so that the users can have a stable currency. When you have 80% of your assets generating 0% of your revenues, you can't have that, or it's just run much riskier. And then there are some other final accounting considerations. So we talked about accrual versus cash. The surplus buffer segregation. So we segregate the equity layer into surplus buffer, operating reserves, and treasury. Treasury is just, we market to market every month and nothing happens to it because we've decided to keep the ENS just sitting in the post proxy. Operating reserves is still technically part of retained earnings and it's funding expenses in the Maker protocol, but it is one layer out of the surplus buffer. So we do call them separately, and it's more junior and more risky because all of the core units could theoretically just rug and leave with the money to an extent. There are some sort of auditor wallets and so forth, but yeah. And then the surplus buffer, we don't segregate this into risk absorption or anything like this because it's all commingled. If we had a separate smart contract layer of sort of senior loss absorption equity, then we could make that distinction. But yeah, like I mentioned here, theoretically, you could have a governance vote for, Maker to use the surplus buffer to buy all of the budgie penguins, and it could theoretically be approved. So it's more conservative to assume that it's commingled. I think I lost 7 participants, so I think I did pretty good. If there are any questions about any specific page or complaints or differences in opinion? Yeah, happy to take them now. If Bantig is on the call, I don't think he will tweet anything because I'm not Rune. But I think it'd be fun to see a tweet from him.
Yeah, I feel like losing 7 isn't too bad. Then more likely to lose that just in one of my rants. Appreciate you diving into it, Adrian.
Sorry for the loss in attendance, Kat, but I'll turn it over to you now.
Cool. And if we do have time at the end, if further questions come up, we can always circle back. But yeah, happy to hand the mic over to Kat from the Ambassadors Program to talk about what's been going on over there.
Hey, so I'm Kat. I'm from the Ambassadors Program, and hola mis makers de Latinoamericano. So can we go to the next slide, please? Thank you. So there's a huge amount of potential for MakerDAO in non-English speaking communities and a lack of educational resources, as well as means for these community members to participate. The Ambassador Program allows for these communities to engage with MakerDAO, bringing us a new wave of community members, developers, and maker holders. The MakerDAO Ambassador Program provides non-English speaking communities with resources and educational materials to expand the MakerDAO community. Ambassadors provide two-way translation services, engage their communities with local events, and share content produced in their own language with the MakerDAO community. So our ambassadors are also community developers, managers, and organizers. They work on and offline to manage a variety of different communities, which I'll speak about later. And yeah, I think we can go to the next slide. All right, cool. So during our pilot program, which started in February, we have fully translated all the documents of the Maker Operational Manual, which is a living document. So we will continue to translate those documents as they go on, and the Maker Docs, as well as our regular updates, which are the weekly relay form at a glance, weekly polls, and our monthly core unit updates, which are regular translations that we do of the governance updates for the forum for the Spanish community. In addition to doing just translations, we've also built a large community on Twitter and Telegram, as well as increased a lot of people from the Latin American community on the forum. Also, we've run a bunch of in-person meetups, as well as online meetups on Twitter, Telegram, Google Docs, Google Meetups, and a bunch of other platforms to further MakerDAO's existence in the Latin American community. Yeah, so we can go to the next slide. The ambassador program is now that they have completed their large evergreen materials of translation materials. We'd like to tackle some larger things. So we'd like to have a Spanish language portal just that has all of the stuff that we have translated and all of the information from all of the different sites and groups in one place that's in Spanish language. We'd also like to tackle the community portal. I know that that's in a little bit of transition right now, but when it is updated and solidified, we'd very much like to take that on as a translation project. Because we've tackled some of the larger things now during our pilot program, we'd like to prioritize community engagement and collaboration with other CUs. So this includes promotion of your new projects, general things that a marketing team would do for Latin American that we don't have right now. And then also we would like to do a small amount of content production as a Band-Aid solution until we get a actual content production team. So we're we'd be more than happy to work with any of those teams that exist in the future. And I think that that would be a better way for this group to exist. But for now, we're happy to produce some information in that time. And we will be in Bogota for DevCon and ETH Bogota. So please see us there. Thank you. And or we can go to the next one, which is questions. Oh, wait, actually, no, where we're going. Yeah, questions. Okay, cool. Yep.
Any questions about the ambassador program, what you just saw presented, or yeah, otherwise anything related to
So I'm just reading the chat right now, and David, yes, so it's docs.makerdao.com. We have translated that, and we put a forum post up. It is in Spanish, so maybe it might have been missed by people, but we have translated that. We weren't able to integrate it into their site yet, but we do have it on Notion that's able for everybody to access.
Obviously, you have a proposal for continuation of the program, right? I don't know if you wanted to talk a little bit about that, or if there were more questions about that, perhaps. But also happy to table it to the forum later.
I'm curious if there are any delegates that don't want this program to continue, and if not, why?
I like the sound of that.
Kat, something that you did go over on the forum, but you skipped here was the metrics for the previous like stage of this. So I don't know if that would potentially help delegates to evaluate the proposal, having real metrics. I think you
Of
also
course.
promised to set milestones. I don't know if that has been done yet. I haven't checked it, to be honest with you. So
I have not updated milestones yet, but we did kind of solidify them for this presentation. But I do have I'll link our SPF with our metrics and stuff. We do have a pretty robust list of like we started with 0 and we've gotten to this point. So thank you, Peyton. All of those metrics are starting from 0, and we've built this in a short amount of time, and we'd like to continue to see it grow.
Wasn't there already like a Spanish like translations and something like an ambassador program before that was initially piloted by ComDev, and then it died out until pretty much you picked it up?
Yes, there have been several attempts at an ambassador program, and I've heard from people who have participated in various stages of them before. They all seem to have fizzled out. I'd like this one not to. And I think now is the time for us to actually take action on this, and I'm willing to see it through. I also I paid for this out of pocket for pretty much half the time that we've been running it. I want to see this happen. I think that it's very useful to MakerDAO, and I think, yes, there have been other ones. They have fizzled out. Let's not this one fizzle out.
I definitely appreciate you coming and presenting there, Kat. Take a look out for the proposal and the forum with any follow-up questions. But yeah, really great to see what you've been working on. And
thanks so much. I'll stay around after if anyone has anything to talk about.
Excellent. Well, seeing no hands or further questions in chat, let's move on to the discussions. So question comes in, I'll try to answer that in the chat. So I think we want to start with the Endgame MIPS.
Yeah, I can give a brief introduction if you want to take a break from talking, Peyton. So I took the liberty of adjusting the MIP editor slide. Thank you, Gala and Pablo for putting that together. But yeah, so here's basically the breakdown of the Endgame MIP set. It has a few top-level MIPs, 83, 84, and 85, the first of which recognizes the initial MetaDAO clusters. 84 is basically, it's kind of hard to understand, but I think it's a way for the Maker protocol to borrow against its treasury. And then MIP 85 is 𝘬𝘬𝘦 MKR, part of the 𝘬𝘬 MKR deal that is built into the Endgame, I believe. Also, I see your hand, Joshua. So I'm gonna pause here and let you jump in. Yeah.
I just had a question. Like, I don't understand. Like, I've looked at MIP 83 recognized MetaDAO clusters. Like, is this like just like assigning colors to people working for the DAO? Like, am I going to get colored socks or something? Like, what is the point of this?
From my understanding, the point of it is to make governing major functions more simple. Like, for example, right now we have, I think, 6 engineering teams. So I imagine that a cluster would just be like a MetaDAO of all the engineering teams in one place. And so from Maker governance perspective, there's I think Rune is trying to simplify the governance
Yeah, but-
actions related to groups of core units.
Right. Yeah. I've kind of heard that batted around, but just looking at MIP 83 as it is now, and I haven't seen any other related MIPs, kind of like filling in the blanks here, but it seems like it's just a framework with nothing, with no actual functionality yet. It's like a it's like a board that hasn't been plugged into or something. I don't know.
Yeah, I think the intention with that one there is like there's a sub component process right after that list that needs a little bit of additions to like round up. But I think the intention there is that that process will be used to update the MIP with the actual list of who is doing the things. So the MIP in its like present form is just saying, hey, we should go forward in these clusters, this many and of this type. And then once we figure out who is in those clusters, we'll update this document with them. At least that was my read. If people want to say I'm interpreting that wrong, I'll consider it.
Yeah, I would be really interested to see like one of these MIPs. I know they're early in RFC, they just got posted. I would, if you're listening to this, I would love to see the MetaDAO clusters thing. Basically, the list of governance actions related to a given MetaDAO. Like I would like to see that like explicitly laid out. So anyway, let me just go back to unless somebody wants to jump in. I heard a mic.
I was just gonna say real quick that like the colors thing is probably just because if there's numbers, it's like, well, you don't want to be core unit 7, you want to be core unit 1. So don't read too much into that, I don't think.
Got it. All right, so let me talk through the rest. So part of this large MIP set proposal, besides the top level MIPs that try to form the core of the endgame plan, there are also amendments that need to happen to initiate the endgame plan, including MIP removal subproposals and MIP 16 amendments. Then there's also mandate modification subproposals to some of the core units that I believe Rune anticipates being in the early MetaDAO clusters. And then lastly, there's the core unit offboardings, which I believe is like similar to the mandate modifications, where these are core units that are being reorganized in some way into MetaDAO clusters or just being dropped altogether. But I think it's the former, not the latter. Anyway, so yeah, so that's basically an overview of the 4 categories within this MIP set.
And yeah, see him from Josh. Let's start there.
Yeah, I guess one more comment. So the mandate modification subproposals, this what it looks like to me is like these core units are getting like decision-making powers or something that used to be controlled by maker holders, or I'm not sure I totally get what this is doing, but is that correct? Like, is it like saying that the facilitators are now responsible for certain things that used to be decisions that maker holders would make?
So I think the idea is that because of the MIP 16 amendment to get rid of signals, right? A lot of the ways we used to push these things forward, like green lights being not a signal, but also something that is looking to be eliminated. A lot of the ways that we would normally like bring things for consideration are gone. So by specifying these actors as people who can, specifically within their mandate, bring something to a poll, you kind of alleviate that concern of like, okay, well, what if a really amazing collateral comes along while we're halfway through in game and everyone wants to do it, but we just got rid of all the technical ways to go about it. Cool. Comment in the chat. Thanks, Josh. I'm seeing a hand from Raphael from Flipside. I recognize 𝘱𝘰𝘮𝘰. If you want to take the mic.
Yeah, I have more like a procedural question, and yeah, cut me off if this is the wrong call to ask that. but like these MIPs are like really like skeleton MIPs in a way, and I just wanted to know, maybe you or Patrick can chime in how this process works. So basically, these are like placeholders, and then during the RFC period, they can be amended in any way or form. Or can you expand a bit on like what I can expect from the process, like what can happen until these come to vote?
Yeah, absolutely. So we acknowledge like the scale is way bigger, so that certainly does present some challenges. But outside of those, like we are very much treating this just the way we would any other proposal that comes to maker governance, which is to say, okay, well, it needs to be posted by the state so the community can be informed that like, hey, this is something that we're considering, putting up for a vote soon. And then by the next cutoff will essentially be the frozen date, right? If Rune intends to put these into the next cycle, as he's indicated, he'll need to have all the edits in basically by week 3, by that Wednesday before last one week before the very end of formal submission. I'm sure there's a better way to convey that, but so basically they'll need to be in their final form for at least a week before they can be formally submitted, and then they would be going to vote for 2 weeks. So just like any other proposal, they can be edited, amended, like changed, scrapped. They also don't have to be put forward to a vote either. So this is kind of the period where we're going to say, hey, I'm trying to do something. Community, please tell me like if you think this is a good idea, or if you think there are changes I should make. And then it will, more or less be his call as long as the procedure is followed. If those get submitted and in what form, provided it's complete, provided like it is a whole MIP. It's up to him if he wants to submit it at that point. Maybe that was confusing.
Okay, cool. Yeah, that totally helps. It's just like for me, it's good to know, like also if we would like propose a MIP at some point, that I was kind of struggling, like what level of completeness is necessary to put stuff up and how it can evolve. So this is really helpful. Thanks a lot.
Completeness is unfortunately a little subjective, right? Like, obviously it needs to be in the proper form, like needs to have contained ideas that we can act on. But like, to use an example of like the MIP 40 amendments, right? There were a few items that once we had passed it, we said, oh, actually, we didn't consider the implementation for this. We might actually need release a statement saying, hey, this is what we're going to do. This is how we're interpreting this. Like, that can happen. I don't want to say like, every possible contingency must be planned for a MIP, or we just wouldn't get any MIPs. So it is really just a judgment call on like, okay, us as governance facilitators, do we feel like if this MIP was passed, we could, follow what it says. But yeah, the challenge is kind of is going off in the chat here is that it goes through the typical MIP process, but this is a far larger scale than MIPs we're used to getting to vote on. Yes. And no, the MIP changement is not a part of this initial set. So it will still just be a 1-month RFC even if this is passed, but the big governance change related to that is getting rid of the signal requests. So it's kind of removing that fast acting ability. Yeah, I mean, if Maker passes, it's a week. Yeah, I know there's like a lot of stuff here. We're meeting tomorrow as a governance core unit to kind of go over what our plans are for the scale of these MIPs and how we can make sure people are aware of what they're voting on. Should these go up to vote? Because at least that's like one of my primary concerns is this plan has been talked about for a while. There's been a lot of changes. There will be updates to the MIPs as we've seen in this in this iteration that have been submitted to. So yeah, my chief concern is basically making sure that like anyone who votes like is confident that they know what they're voting on and that they're able to express their opinion based on that. And yeah, Josh does have a good question. You're asking if they're all going to be a single vote. The answer is we don't know yet, but most likely not. We're pretty sure at least some bits will be split off into separate sets, but it's kind of going to be partly up to Rune and partly up to what Patrick and I allow, and what we allow kind of depends on the content of the MIPs. So we're in touch with Rune to basically say, hey, here's how from a governance standpoint, I think this is probably the best way to do it, and we'll see if he agrees with that or not. But yeah, as Juan's pointing out, the way Rune has structured it is as like one vote minus Lido. But I think there might be some wisdom in splitting out the MIP 16 stuff as well. And then there's also some weird interactions with core unit offboardings, right? Like anytime you bundle a core unit offboarding with something else, like that could be objectionable to people in that core unit, because you could say, hey, well, you're just tying us to this terrible whatever that needs to be changed so that will get offboarded, which is like, perhaps a reasonable grievance. So that's why we're not able to just say with definity what we think will happen with these. But ultimately, like, there will likely be at least some split off, particularly with the Lido proposal that Rune himself has mentioned. That's his intention. Yeah, bring it on, David.
I know that there's still a few proposals that Rune is working on that he intends to post. Does anybody know what those are off the top of their heads?
One more time, sorry. What was the?
Does anybody know what the proposals are that Rune hasn't posted yet, but intends to post also as part of this MIP set?
So these will be all the proposals considered for this first governance cycle. It sounds like Rune kind of has a phase plan for later, like we said, with adding in the 90-day RFC and stuff like that. But yeah, this is all that. Nothing else submitted at this point will be eligible for next cycle's vote. So if he does push anything forward, the soonest it can go into vote would be November.
I think scope maps are like the big thing that's gonna need to be voted in next.
Do scope maps like inform what clusters are?
In form of like what the objectives are. I think there was a focus objectives, and then these kind of scope maps. Yeah, exactly. That governs like who's clustering. As far as I've understood, these two things then are important next steps for the plan.
Yeah, I suspect there'll be a lot of questions just in terms of the governance procedure and what's going to be allowed and not allowed. And just want to let everyone know, like, we're aware that this is a pretty big weight behind it, and we're going to be processing things as quickly and efficiently as we can. But we'll probably ask for some grace and understanding that, like, yeah, this is going to be a pretty big endeavor. Just kind of negotiating what can be allowed on top of what Rune would prefer.
Yeah, I guess the goal here was really just to get the preliminary thoughts and feelings from at least like some delegates in the community about these MIPs, they are just posted, so they are in RFC. They're going to be changed, but yeah, continue to participate in the discussions. I know Tim's call has been chilled quite a lot, but yeah, join that tomorrow. I know Rune has his DVCs next week. I encourage people, to dig in and let's make this thing work well as best as we can. Anyway, I know we have an overflow topic. Should we move on? Are we satisfied here? All right. Also hot off the press, the Coinbase Institutional, just Coinbase Institutional posted a proposal on the forum this week to basically take, I think it was 1.4 billion USDC from the PSM and custody it for us in exchange for some yield. 1.6 bill. Yeah, cool. And so the primary conversation that I've seen in the forum surrounding this proposal has been around risk. And so, yeah, I'm gonna kind of pause there and how do I want to do this? So there's pros and cons to this, and I want the participants in the call, especially the delegates, but even if you're not a delegate, feel free to participate in this. But I want you to use the annotate tool that Zoom has. It should be in the Zoom bar that is present wherever you're viewing the share screen. And there's a little annotate button with a pencil. And if you click it, you get the option to draw, to use text. Please use text and add what you think are the cons to this proposal and what you think are the pros to this proposal. I know risk is a huge piece of it. And so, yeah, I think we could pretty much stop talking for like 5 to 7 minutes and go for this. I'm gonna run a timer actually. Oh, I have to sign into Zoom. I'm not signed in, jeez. Okay, I can't sign in, so I'm not gonna run a timer, but maybe.
Yeah, I can watch the clock.
Yeah, okay, cool.
There may be some limitations for phones and other platforms. I also know, like on my screen, maybe because it's smaller, my annotate is like way up top on view options next to your view and David in terms of screen. But if anyone has things that they would like to add, but they're technically unable to, feel free to drop them in the chat, and I'll spend this time just typing people's stuff and adding them in. So yeah, we'll take 5 minutes and essentially silence here. Maybe if David wants to play soft tunes, he can.
Yeah, I'm gonna share my sound and I'll play some soft tunes. Definitely chill. And also, because I'm sharing slides, I can't use the erase feature on Annotate. So Peyton, I'm actually gonna task you with cleaning the spam. So please guys, use text and let's spend the next 5 to 7 minutes writing out our pros and cons. And I'm also gonna do my best to write out what I heard from like the delegate office hours call that was just before this call. And so yeah, let's get into it. All right, so it's been about 4 to 5 minutes, and I'm seeing like a slowdown in the annotation, so I'm gonna pause here. Yeah, Juan, this is weird, and that's part of trying to do things a little different, trying to get more engagement. So yeah, man, I hope you could stomach it. But otherwise, yeah, so the pros and cons are basically like revenue that would make us, stay afloat. Also, the fact that one thing I heard that was really interesting was, it's the same risk as USDC in the PSM, because if we put the USDC, I mean, they could freeze it in the PSM, so if they're custodying the USDC, it's basically the same risk. They can screw us one way or another. It's just two different ways of screwing us. So it's definitely not the same risk. So I'm curious about like where that statement is wrong.
Yeah, we just had Sebastian on the delegate office hour call, and so in addition to the risk of holding USDC, you add the risk of employing a custodian, and then adding the risk of whoever interacts with the custodian on behalf of Maker. And then you add the risk of whatever duration there is to interact with the custodian. So there is additional risk. The question is how you quantify that risk and if you are saying that it's substantial or not, but it's definitely not zero.
So Chris writes, Maker can currently move USDC without permission. Maker would have to ask Coinbase for permission and notify them in advance of moving USDC. Yeah.
What timescales does that happen on? I'm just curious. How long does it take?
I think an urgent proposal by a facilitator would take a week. On Coinbase's side, once it's passed, it'll take them, assuming they see it right away, apparently 6 minutes.
Okay, and in the PSM, it's a single block, basically, for funds to move.
Yeah, but that's not the full picture, because getting the message to the custodian is what takes time. And currently that would mean a governance decision of 1 week, right? So we're looking at two very different animals here.
Yeah, I'm just catching up on chat, by the way. So feel free to jump in with free conversation, guys.
Yeah, I mean, I guess I don't quite understand why they need to hold it and have custody of it if they're not going to lend it out, rehypothecate it.
So how would they generate the yield then paper if they don't have the
right?
capital?
Well, they say it's just going to sit there, right? So how are they getting the yield then? What's the difference?
Fair point. Does anyone have an explanation on where the yield's coming from?
The speculation is it's coming from Circle, who is making money off of this USDC already through their short-term treasuries. But from what we discussed on the delegate call, nobody was able to explicitly confirm that.
Right, so is the alternative then that what could easily just happen is they could look at the balance in the PSM and pay the interest rate based on the balance of the PSM. And whenever it drops below, let's say the 1.6 billion or whatever, they just pay some like, interest rate for those blocks at that lower rate, right? And that would preserve sort of sovereignty over the USDC and the PSM, but also give the interest rate.
Yeah, I mean, I think that sounds like a great idea, right? I mean, we could even say, let's do a much lower rate, but on the whole balance, and whatever sits in there not moving for, I don't know, 30 days or 60 days or some measurement window, they can just pay us. Yeah. Hey, Chris, why don't you call up Coinbase and tell them that?
been pretty responsive on the thread, so perhaps you just need to type
I mean,
a message out.
that's a question to ask them. There could be some complicated legal or accounting reason they can't do that. So this is certainly something we should get more clarification on.
And I saw a hand for a moment. Chris Black here.
Yeah, I asked in the thread where the rewards are coming from, and they replied the USDC that Coinbase uses to pay institutional rewards comes from Coinbase's inventory of USDC. Coinbase funds the inventory from its own purchases of USDC from Circle, from purchases of USDC from users of Coinbase, and from payments that Coinbase receives pursuant to its revenue sharing agreement. So they made it sound like they're just paying the interest out of their corporate treasury or whatever, as if they're deriving some benefit from the custody of the maker PSM USDC. So my follow-up question was, what benefit is Coinbase deriving that makes them want to pay this this reward in exchange for the custody? So I don't know if anybody can answer that, because I haven't gotten an answer from them yet. There must be some benefit to Coinbase here.
Like, I guess I would know that it's not going to be redeemed for a certain period of time, right? So potentially need less cash on hand. I don't know.
So the
Knows it
idea
more
here
about-
is to just lock up USDC. I mean, it's something that we should probably be aware of. Like, what benefit are they deriving from this arrangement?
Yeah,
It's a
I mean,
question I
if
asked in the
someone-
thread, so hopefully I hear back from them.
Definitely. Yeah, perhaps someone from the finance guys can weigh in on that, but my understanding is that by, not having to keep that as on-demand deposit, like, that gives them a lot more liquidity to invest in other things.
So there's something I don't really understand. So I've been hearing this proposal mentions that they will custody it and that they are not like rehypothecating it, right? It's fully liquid at all times for Maker. But then on the other hand, there's still kind of like, it's weird. Like, are they not like using this USDC? It's like, I'm confused.
They explicitly say they're not using it. They're not going to touch it in any way unless we tell them to. They're very explicit on that in the thread.
They said that. They said it's not going to cash, it's not going to T-bills, it's not going to bonds, it's not going anywhere. It should be, it should remain, based on what they're saying, it should remain on chain, like clearly in a wallet for us to see. I mean, I would think.
Yeah.
So that still begs the question, like, what's the benefit? What are they doing?
So they get $1.6 billion on their balance sheet. Maybe they're able to borrow against that from other financial institutions. I don't know. David has his hand up.
Yeah, so this is a bit of speculation, but based on my knowledge of how USDC is run, I think this is totally about keeping the total supply of USDC maintained. And Coinbase is looking at Maker and saying, okay, if Maker wants to get rid of their USDC and invest it in bonds, it's going to reduce our total supply that Circle and Coinbase are managing. We're going to have to sell off our investments, and our TVL or whatever total supply doesn't look so good. So by doing this, I think they're just realizing, hey, we're already investing the underlying USDC that's sitting in our PSM in government treasuries. Rather than reduce our total supply of the USDC coin, let's share some of those incentives. And that's coming in directly to Coinbase. And based on my understanding of the custody, they're not going to touch it. They're not going to invest it. It's just locked up. So from that perspective, they get the comfort that, we're not going to burn it or do anything else with it. So that's sort of my interpretation of the transaction.
Can I add something that I thought that just occurred to me because we're trying to figure out what their incentive is. A few months back, there were like rumblings during the big sort of pullback and the contagion that was happening that Coinbase may have been insolvent, and somebody had traced one of the user agreements that they had to a change that said or clarified minimally that funds that are custodied by Coinbase are actually the property of Coinbase. They're not FDIC insured, and so therefore Coinbase did end up going through a bankruptcy. Those funds would be available to creditors as a priority, as opposed to funds they didn't control. And keep in mind, Circle's a separate entity. So right now, USDC is just run by Circle. So I would posit that what they get out of this is the ability to possibly claim bankruptcy and put that insolvency on us. Basically, we become like a creditor to them, and they can use those funds in the case where they do end up having to claim bankruptcy. So if anybody has like a counter to that point, I'd love to hear it, but that's my understanding.
Yeah, so my understanding is the custodial arrangement, it's segregated custody. So from that perspective, supposedly it's bankruptcy remote. So even if Coinbase went bankrupt, we would have a claim on the underlying USDC. But obviously we'll need, legal assessment and legal opinions to determine whether that is indeed the case.
So I think we covered, at least some aspects of that, but perhaps there are others. Like I know personally when investing, right, like I tend to take the view that like you get compensated for risk, right? So you could view the 24 million as compensation for this extra risk, which makes the question, okay, is that enough compensation? Are we being adequately paid out for the extra risk we take on for the protocol? Curious if anyone has any heuristics for evaluating that. Can always discuss relevant items, Chris. He's asking if we can discuss the biggest font size, which I assume is dies if the money isn't returned. But
it's equal with there's no guarantee that Maker will get the money back. And if Maker doesn't get the money back, then what happens? It all goes bye-bye, right? The fact that there's no guarantee and that there's no possible way that Coinbase could guarantee that it won't be forced to freeze the funds, seize the funds, take the funds. Again, yeah, you can say, oh, this risk already exists with USDC, but now you're adding another layer and you're adding another party and you're adding more risk. Okay, so we've gone over, I've asked this question to Coinbase in the forum and there's been no answer yet. The question is, if Coinbase, if it's brought up, let's say it's in the media that an OFAC sanctioned party is using DAI, opening vaults, making payments with it, whatever it might be, how is Coinbase going to react to that? Are they going to freeze the funds? Or is it going to be frozen for a year while there's an investigation? Like, how's that going to look? We're putting ourselves at risk, and everybody's afraid to talk about these issues and these questions.
Chris, there's no DAI involved here. It's USDC. So I don't see how
the USDC is the collateral that's being custodied with Coinbase, but that USDC is backing DAI that's in circulation. And if the DAI is being used for an illicit purpose, according to a tyrannical government that I clearly don't agree with, but we're putting ourselves at risk of a custodying party who's holding an existential amount of collateral where they would have to potentially intervene. Can anybody tell me that that is 100% not a risk? Obviously not, right? So
what I can tell you is that for the Monetalis deal, and Alan from Monetalis would have to confirm this, as part of the KYC, they did a chain analysis of the USDC in our vault, and it came up clean.
I'm not
yeah,
talking about the USDC though. I'm talking about the DAI, because Maker can't blacklist or censor DAI. Maker can't turn off a wallet or stop a transaction from happening. So if Kim Jong-un or whoever wants to pay Putin for a Big Mac with DAI, we can't stop that from happening, and that's a sanctioned transaction. So then if that comes to light, then there's no way that Maker can stop that from happening or prevent it from happening in the future. So a regulator or OFAC or whatever, FinCEN, whoever, would look for other ways to stop it from happening.
But yeah, I just don't quite see how that's relevant to this case. We're putting USDC in, Coinbase only sees USDC. Our DAI has nothing to do with this unless they want to go back and see the ultimate source, right?
Yeah, I'm sorry you're not connecting the dots, but it's very clear to me and a lot of other people that if DAI is used for an illegal purpose and Maker cannot intervene, has no ability to intervene, then a government, a state actor, a regulator, somebody who's in a position of power could look for other ways to shut Maker down. And one way to do that is to make a phone call to Coinbase and say, hey, if you don't freeze these assets, if you don't seize them while we do this investigation, we're going to throw you in jail. And then Brian is going to be like, oh no, I'd better do what the government says. And then he would freeze the collateral, and then DAI is done because everybody's going to be selling their DAI, everybody's going to be selling their Maker, and the whole thing is over. Can anybody tell me that that is not a possibility?
Yeah, it would destroy all of TradFi. I mean, I think we heard this the other day on the centrifuge call. Basically, if what you described happened, Chris, basically they would be violating global custodial arrangements for securities, which the TradFi system relies on, and it would the TradFi system would sink as well. So. Yeah.
Okay, and is DAI not unique? Is DAI not a little different from TradFi? Is DAI not a guinea pig here? Is DAI not a first mover? When have governments ever really acted rationally with this type of technology? There's really no way to say that a government won't act irrationally, maybe even illegally, while it tries to figure out what to do next. We've seen it many times over the past 2-3 years, where a government acts first, puts everything out there, does illegal stuff even, and then a judge comes in a year later and says, oh, you shouldn't have done that. Let's reverse everything. Okay, a year later, it's kind of too late, right? So again, let me finish. Unless this possibility can be ruled out 100%, there is no justification for doing this to earn $24 million from Coinbase. It just doesn't make sense to put DAI at an existential level of risk, almost doubling probably, if you want to put it into math terms, what we're dealing with right now, just by holding the USDC. It doesn't make sense. I'll finish.
Yeah, no, I think, Chris, what you're saying is could apply to any real world transaction. It's not specific to Coinbase. So, no one's going to give that guarantee for any of the real world actions we do, regardless whether Coinbase or another.
That's why I'm against all the real world stuff.
Right. So, yeah. So I
Well,
don't think this.
so I mean, the real world stuff. Look, so what can happen is anytime we lose a collateral type, Maker, the protocol, loses a collateral type, it has to go through some sort of, bad debt auction and attempts to sort of recollateralize itself, right? Since there probably isn't going to be any collateral in this case, that means the entire thing is a loss. And that would end up hitting both the surplus buffer first, which is around maybe 80 or 70 million or something. And then it would dilute MKR after that by minting MKR. So anytime the Maker protocol, Maker governance engages with a real world asset, really with any asset, it needs to figure out sort of what these worst case like failure scenarios are, assign a sort of risk to them, and ensure that it has enough sort of surplus buffer and let's say capacity in the MKR token in order to take the hit. Because once those things are exhausted, it's DAI holders that take the hit. And
So I would say that real world assets are completely possible to do safely and in a risk adjusted way, so long as they don't have the risk of sort of overcoming both the surplus buffer and the ability of MKR to be minted to recover the bad debt. And so the question is what is it, 1.2, 1.6 billion, something like that? Let's just call it 1 billion. Do we believe that we can take a 1 billion hit to the surplus buffer and to minting MKR such that it doesn't basically completely collapse the protocol and then put the loss on DAI holders?
Thank you, Chris, noticing the appreciative comments in chat. Aside, I told Patrick anytime Chris starts talking, it's applying policies.
Yeah, just wondering, are we using that same proxy for wrap BTC? If we took a hit on wrap BTC, which is a real world asset, just for the same reason, would it wipe out our surplus buffer?
That same calculus should be used across all collateral types. So yeah, we should use it there.
I mean, this was like the whole anxiety behind people. Well, this was a part of the anxiety behind why people wanted a larger surplus buffer, right? So that we could actually do stuff like this. Maybe not 1.6 billion, but maybe smaller. But yeah, we could do it in a way where we're not existentially screwed if it goes wrong.
I mean, it's really DAI holders that are existentially screwed, right? Because the surplus buffer's gone, MKR can't handle that much minting. DAI would end up being shut down and the haircut would go to DAI holders. So.
Well, I am aware of the time. Like I said, this is a very important conversation, so I don't want to cut it short if there are other things that we have run over, in part thanks to all the participation today. So one last call if there's anything else you would like to get into this recording. But yeah, really do appreciate everyone participating. Makes the call a lot more fun and productive. Right on. Well, sorry for the abbreviated wind down, but really appreciate everyone coming out. We'll be here, same place, same time next week. Let's keep the conversations going in the forum. And yeah, thank you for your time and attention. Talk to you next week.